Today we're going to talk about building consistency and high performance trading habits. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Hopefully everybody had a good trading week. We're going to be looking at a couple of things today to go over why I kept tweaking things and making things as simple as possible for myself. One of the challenges as a retail trader for a lot of traders is just getting consistency in their, not only in their process, but in their results. And one of the biggest ways to develop consistency for myself that I have found was to make everything as simple as possible. We have so much information in the trading world, so many different ways to trade the market, so many conflicting bits of information, but when you strip things back and look at the charts, and we know from following the 50 pips a day, the system is based on just how the market works. Consolidation, stop hunting, trapping volume, hitting the highs, hitting the lows, and moving the market. And when you step back and start to peel the layers back, you can start to identify some of the simple best setups for sell setups and for buying setups, and then of course for trend setups. And that's basically what I did over time. You learn through trial and error, you make mistakes, but one of the biggest things about trying to make things simple or consistent is to make it simple. Number one, a way to control our risk and a win rate that's better than 50 or 60%. So when I started to piece things different together over the years that I've learned and started to just really strip things back further and further to what I could duplicate on a regular basis, and then obviously identify the best setups, ones that as they showed up frequently enough you could start to scale those in size. Now some of those learning experiences were painful, even though they paid big dividends in terms of what they taught, but the school of hard knocks can be painful sometimes in the trading world. But we talk about identifying structure. Now we've talked about the big picture in the last few videos, the geometry, the rectangles. I really like horizontal boxes. So we have rectangles that form at the tops of ranges, we have rectangles that form at the bottoms of ranges, and we have rectangles that form in the middle of trends. So when we get those consolidations, they will often be geometric expansions for measured moves. Whether we look at those and we call them an ascending triangle or descending triangle, they technically are still going to move in a measured rectangle of movement. We talk about the high and the low of the day. Now this is a question I've been getting a lot lately, and I'm going to hopefully clarify this a bit more in my daily levels videos, is identifying the true high and low when the next day starts that the market is trading between. So obviously we look at the high and the low of the day, but if we're inside of a bigger range, that has a very big significance, not only from the previous day's highs and low, but if we're inside of a previous session high and low, that in itself, if it's broken out of, could also be a measured geometrical range. So the market may be pushing up high to the top of the real high and low for a sell-off or a breakout, and vice versa for a break through the low or a buy low setup. So it's really important that we identify the true highs and lows. Now what I did in the past is I printed off all the selling setups and buying setups that showed up recurrently. So we see three peaks, we see triple bottoms, we see, which is basically a reverse head and shoulders or a head and shoulders pattern. We see double tops, we'll see again the double bottoms and descending triangles and ascending triangles. But when you see those patterns showing up in the Asian range or sometimes in the Asian London range over the course of a day, then you'll start to recognize as we head into that next 12 candle window, if we're already in a buy setup that's already started to move, or if we're in a sell setup and it's starting to move as we head into the 12 candle window. And that goes for the US session as well. We could come out of a sell-off in London for a buy scenario in the US Open. The timings. So again, the most important thing to me is the timing. Most of these movements will occur or complete in that 12 candle window. So we may already have a move that started outside of 12 candle window. But when that market opens, we will often have a completion of that move or the beginning of the next 50 pip or more movement. And most of these trades will come off of or at round numbers, mostly zeros and 50s. So we have quarter level movements, but the box itself may be building on top of or below of a double zero or a 50 level. Typically these main movements, when the markets do shift, will be from zeros to 50s or vice versa. And when we get to those patterns and we're at a sell high setup or a buy low setup, I'll look for 3 pushes to complete the move for an engulfment, possibly, or a pin hammer. So if we're in a trend trade, we may get a pin hammer. If we're in a trend trade that's gone into consolidation, we may get 3 pushes and an engulfment for the continuation, and vice versa for the long trade. Or if we're at a blow off on an extended W or an extended M pattern, we may get a pin hammer beside an engulfment pattern. So these are some of the setups. Hopefully you're printing them off. We've had the same things showing up week after week. And then again, the simplest thing, and I've really sort of had to train myself to do this, just as a matter of making sure it's simple, control risk, and not worrying about the outcome of the trade, but putting my once I'm in the market, putting my stop in and my profit target immediately and just leaving that and walking away. So sometimes that has the best effect on you as a trader, not feeling that you can control by sitting at the screen and stressing or anything else, but knowing that you've executed the process, you've kept it simple, but number one, you've controlled risk, because that's the biggest thing about our consistency is being a good loser, controlling our risk. Because whether the market will hit your profit target or not, or if you have a timer set, or if you have an alert set for a certain amount of distance, all those things can happen, but the number one thing you want to do is make sure you control your loss, because if you keep that consistent, then the rest of it will take care of itself. So what's really simple for me, because I know that 80% of the time we're going to get movement in our 12 candle window, and if it doesn't set up for the movement to start in that first hour or two, because we're already in a move from Asia, then most likely we're going to get a 3rd hour trade. But I know 80 to 90% of the time in this 12 candle window we're going to get a trade opportunity. Now the next thing that will help to develop that consistency and simplicity is sticking with the best trade setups. So I talk about not trying to trade every move in the market, and the reason why I tell you that is because I've done that, and that's what interferes with consistency. So we want to look for some basic sell high setups. So the market may be the number one thing I look for each day is if the previous day's high or low has been broken, because we may be now in a market that's obviously going to have a false break, or we may be in a market that's potentially trending for a continuation move. When we look at our Asian session, our Asian high and low, we want to know if that market is potentially going to continue with a trend, or if it's like we saw on yesterday in a couple pairs, it may be a false break scenario where it breaks the previous day's high or low, triggering breakout orders, attracting other time frame traders, maybe institutional traders, bigger money traders, but that may also set up for a reversal back through the previous day's session. So again, I talk about that high and low of the day is very important. That's one of the first things that I look for that particular pair to be on my hot list. Because if we're inside of the previous day's high and low, we may be in a situation where we're working the high and the low for the rest of that session, which means it could be a US session trade. But if we have something broken early on one of those extremes, now we potentially have a market that's more active and it's already in motion for that day. So that may potentially set us up for one of our best setups. So you should be hopefully printing some of your best setups off that you're seeing again and again. And for me, it's pretty simple, because I think they all show up the same. We have sell high setups, and we have buy low setups, and we have trend days. So that's the three main areas that I look for. If I can't spot it right away after the Asian session has traded, and if it's just inside of the previous day's range, I'll pretty much leave it for that session and come back and look at it at the end of that 3-hour window or prior to the US Open to see if there's something setting up maybe for the next session. So I don't try to trade the 6 pairs all the time. I look for some triggers right away. We want to see if one of those borders has been broken. But again, simplicity. I just want to look for my best trade setups. And I am looking at, if I don't see something that looks really clean on the day, I may go and look at the euro crosses to see if one of those pairs is setting up better. Or I may go look at one of the major pairs just real quickly to see if any of those setups are showing up on the other major pairs. Typically, I mainly trade the British pound crosses because, as you've noticed, most days there's a very strong, good chance that there's going to be a 50 pip trade setup in one or more of those sessions. So hopefully that makes sense. We'll look at some screenshots today of some of the sell high setups that show up over and over again, and some of the buy low setups that show up over and over again that I like to trade. So again, thank you for all the comments, the feedback. Keep it simple. If it's really simple, you can get consistent at it. And if you can get consistent at it, you can tweak things, you can start to work on where your individual challenges are. So again, every trader is going to be, you're going to face the same challenges on different days for, you know, feeling maybe not at your best to be trading. Maybe you're going to get emotional, or you're going to not be in the best mental state for trading. And I really focus on routines and habits, because I believe it's your habits, not only in your trading process, that will develop the consistency, but in your daily life and whatever will help you be a peak performer, not only in trading, but in everything that you do. I believe that if we work and take action steps on the things that are going to keep helping us get the results that we want, we don't have to focus on the results. We need to focus on the action steps and the habits that will help produce those results. So hopefully you got some value out of today's video, traders. Thank you again for hitting the like button. I'm going to go through some screenshot examples of those setups today. And again, I encourage you to do the same thing, and you're going to see the same setups over and over again. Enjoy your weekend, review, improve, and keep getting better, and may the markets go with you.
This is an example of a buy low scenario where we break the previous day's low and form a reverse head and shoulders before pulling back inside of the range. But this 3-peak reversal is a pattern that you will see on a buy low scenario over and over again. Another example of the market sitting on top of the previous day's low, just touching it before pulling back inside at round numbers, giving us a peak formation, but also trading inside of the previous session's peak formation high. So we're in a box where there's a high and a low. Previous day's low, we stay inside of that. The market auctions down and pulls back, gives us a double bottom W formation, then again pulls back, gives us a pin hammer and a bull candle that engulfs all the other pullback candles for a type 3W into a fast moving breakthrough the highs of that peak formation high box. So again, an example of a buy low scenario just inside of the previous day's low. Another example of a market breaking the previous day's high before going into consolidation, 1 push, 2 push, and 3 pushes, and dropping back down inside, and then giving us a W formation and a breakout candle again, back in line with the original breakout through the previous day's high for a type 3 W formation that consolidates with a bullpen hammer into the Europe-London 12 candle window. So again, a buy low scenario. Buy low with the type 3W. It's a market that breaks through the previous day's high before pulling back a little bit from breaking that high of 2 days earlier, and then again giving us a type 3W scenario after a 1, 2, 3 and a consolidation at the high of the day, and a bullpen hammer for a continuation of a breakout trade into our next 12 candle window. So we have a breakout that pulls back, 1 push, 2 push, 3 pushes, and continues the move, strongly in line with the original breakout for trend trading. An example of a market where it broke the previous day's low, one push, two pushes, and then a 1, 2, 3 engulfment at the first candle of the Europe-London 12 candle window. We get a breakout pullback, pin hammers for the continuation, but we had a buy low scenario setting up in the Asian session. Broke the previous day's low, went into consolidation sideways, hitting the low, pulling back, 1, 2, 3, hitting the low again before engulfing strongly at the Europe-London Open. A buy low scenario. Another example, a Monday morning gap. Market breaks through the previous day's low before pulling back inside. Works the low, works down into the previous day's low, pulls back, pushes down again one more time before in our 12 candle window breaking out to the high again. We're still inside of the previous day's range after the pullback, and it has failed to break through again, pulling back, consolidating, breakout pullback, pin hammer for the continuation back inside of the previous day's range. So again, an example of a buy low scenario at the previous day's low. Another example, again, breaking the previous day's low, going into consolidation, hitting it again, pulling back, hitting it one more time, 1, 2, 3, sideways engulfments, consolidation and bull candles breaking through the Asian high into our 12 candle window for a breakout move. But again, previous day's low, working the low, working the low, working the low, pulling back and pulling back inside of the previous day's range. A buy low scenario. This is a setup that I see quite a bit show up. We get the 3 peaks. This market breaks through the previous day's high at the end of the US session, pulling back, pushing up again in the next day's session. Doesn't take out the previous day's high, but we're pushing up into the breakout peak. We have 1 push, 2 push, and a third push that has a micro double top in that Asian session open before pulling back inside of the range. So again, we're just establishing some simple ways to identify, is this a sell high scenario possibly setting up or a buy low scenario? We have our low of our box where the move started. So we're in a 50 pip range. The market pulls back and auctions down, breaking through the low of Asia, pulling back, bear pin hammers, and a sell scenario heading into the Europe-London 12 candle window. Now, this market pulled back to hit the highs of the London session. But what's important is just noticing we have our anchor point and we have 3 peaks for a sell high scenario. A similar example where the market heads into the next day, tight range from the previous day. It's not at the previous day's high or low, but we get our 3 peaks scenario, very similar to what we just saw. The market pulls up to the high just prior to our Europe-London Open, gives us a middle structure for consolidating, and then an inside bar off the round numbers for a move back through the low of the day to the previous day's low, a sell high scenario. Another example of 3 peaks. We break the previous day's high. The market pushes up in Asia, gives a second burst before dropping down and consolidating, hitting it a third time, and then a 1, 2, 3 engulfment into the Europe-London Open for a move back down for 50 pips to the previous low of the day from 50 to double zeros. Sell high scenario. And one more example, similar again, market has our anchor point low, pushing up 1 push, 2 pushes, and a third push with a 1, 2, 3, and an engulfment off of round numbers, double zeros, for the 100 pip move down to the low of the session. Just to gain an example of the 3 peaks, 1 push, 2 pushes, 3 pushes, and actually that's 50 pip move, I believe. But the sell high scenario was set up in Asia. The market was making peaks for selling, consolidating underneath the numbers with an engulfment back to the previous session's low.
Hi traders, it's Stacey Burke from Stacey Burke Trading.
If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.